Hey guys, Adam here. I'm going to do a professional series video today. I'm going to show you my favorite day trading setup for the ES. Now this strategy works best for the ES intraday because it's so volatile, and you'll pretty much see why once I start showing you examples here. This is actually today's market, and these are actual trades I took today. I just wanted to let you know the ES is probably the best market to use this strategy on, but it can be used on others. But let me get started here. It's a trend. It's a trend continuation type pattern. It's based on Fibonacci's and pullbacks and stuff like that. As you know, in my live trading room, I use a lot of Fibonacci's. But let's get started here, and I will show you, and we'll fill in details exactly, exact entries and how we manage these positions, and so on and so forth. Currently today, you see the market opened up here, and as you've seen, it had a nice push up. Nice push up, guys. So we had an obvious pullback. Now, this pullback right here was at the 50% line. 50% pullback, guys. That level happens to be this exact price level here. So these two levels are going to be exactly the same. This is just a 1600 tick chart. This is a 233 tick chart, guys. So we have the longer swing over here, the longer term swing here, and then we have the entry and exit time frame here. Sorry, I spelled that wrong. But anyways, moving forward. So we have a full pullback. Let's go ahead and move forward here, and let's zoom in on that exact time frame. That fell right here. So we have this pullback right here, guys. Now, I can enter on a 50% retracement. I can go ahead and enter this full swing on a 50% retracement and look for it to trade to the upside. Now, obviously, we like to put our stops below the 61.8. So you're looking at, on this particular example, about a 2-point stop, which is not a lot, guys, but actually about 2.5 point stop. About 2.5 points. Not a lot, but still, it's a 10 tick per contract. So some people aren't comfortable using that type of stop. So what I say to do is, right here when the market bounces off the longer term move, when it bounces, do the exact same pattern again. Low, you do the exact same pattern again, guys. So you simply drag from the low to the high, and everything is exactly the same. We have the same pullback, guys. On this situation here, it's a micro pullback. But you got to know that, hey, the market's already started to push up. It started to push in that direction. So guess what? We enter on the 50% pullback. In this instance right here, we're looking about 1608.75 to 1608.50. Stops down here a couple ticks below the 61.8. So we're literally looking at 3 ticks of risk. 3 ticks. Not 3 points, 3 ticks. So that substantially eliminates a lot of your risk. And this strategy here is a very high percentage strategy, as long as you go in the direction of the longer swing. So then, let's do some rules here. Let me drag this over and we'll fill out some rules. On the macro, we'll call it, swing, which is this swing over here on the 1600. So we're going to call that the 1600 tick. What we need is, we need a 50% pullback in the direction of the trend. Not too bad, right? On the micro level, in this instance, we're using a 233 tick. We need a bounce off the 50% 1600 tick pullback. Then we need a 50% pullback after the move. So, does that make sense, guys? Basically, we entered after the full pullback here. We see we got conviction back to the upside. The market started to go ahead and push. So what do? We simply take a 50% and we trade it up. Now, let's talk about how to manage this. Management. Managing the position. I'm going to recommend 3 contracts, but you can do what you want. If you're a single contract trader, let's do this. 1 contract. One contract. Do 1-to-1 reward to risk. I'm sorry. 1.5 to 1. Sorry about that, guys. 1.5 to 1 reward to risk. So in this, for instance, here, we're risking 3 ticks. In this example, we're going to want to get 4 to 5 ticks out of it. Does that make sense, guys? On a 1-to-1 single contract, we would enter long here, and we would look for 4 to 5 ticks in our direction. Just because of the reward to risk. Okay, guys? Management. Let's hope for, I guess, the 75%. That's what mine is. 75% win percentage. Alright, so 2 contracts. Now, 2 contracts could mean 2 contracts, 4 contracts, 6 contracts, however you want to do that. Then I'm going to do an explanation of 3 contracts, okay? Alright, guys, 2 contracts. Let's do the first one. Let's do +2 on the first contract. And then then let's go up here and let's just go ahead and look. It's going to be the -23%, which is the green line here, guys. The green line here, the green dashed line. And then the -23% for the second target. So does that make sense, guys? Let me clear that out. So on this particular example, we would get long here at the white, which is a 50% pullback. 50% pullback here, guys. And then we would take +2, and then second target would be at the -23% Fibonacci, which is the green dashed line here. If you have any questions, I will help you set these up. Okay. And then for 3 contracts, we're looking for a +2 on the first, -23% for the second target, then trail for the third. I'm having a little trouble typing here for some reason. All right, and then trail for the third. So in this instance, guys, let me put an example in here. Trail 8 or 21 EMA. Let's just do that for now. You can play with this and see which one you like personally, but that's what I would do. And then obviously once you hit your second target, your stop order goes up to your entry, and then you start to trail on up. So that's that instance, guys. Let's move over here and look at some more examples.